If you're considering buying a 2 to 4 unit property with 5% down or less, then you're probably weighing out these two top options. There's conventional financing and FHA financing. Did you know that you can buy a 2 to 4 unit property with conventional financing with only 5% down and use the rents to qualify, plus the sellers can help pay for your closing costs? On an $800,000 property, that's $40,000 total out of pocket. Hi there, I'm a licensed real estate broker and home loan officer in California. In this video, we'll cover everything you need to know about this program, including who this program benefits, guidelines and requirements, a buyer's experience using this program, and a visual breakdown of the transaction details. So here's what makes this program stand out. You can purchase multi-units with just 5% down. Not sure if you knew this or not, but up until recently, you had to do 20 or 25% down if you wanted to buy 2 to 4 units. So this is a major change. No upfront MIP is required. You only pay a monthly premium or a single premium payment. If you have high credit scores, it can make sense to do a discounted single premium payment to eliminate monthly PMI. PMI cancellation. It is cancelable once it's no longer required. Private mortgage insurance is removable once you have 20% equity. That means you owe 80% of the value or less. Now, you can achieve this in 3 different ways. The property can increase by 20%, the loan amount can decrease by 20%, or a combination of the two. An example would be that the property increases by 10% and then the loan amount decreases by another 10%, effectively giving you that 20%. This program is built for owner occupants who want to house hack. You can live in one unit and rent out the rest. This program lets you start building equity and cash flow with a minimal out-of-pocket. Most lenders will allow you to count up to 75% of the projected rents from the remaining units to boost your qualifying income. So your future tenants literally help you not only qualify, but they also help you pay off the mortgage. Let's talk about gift funds. Gift funds can cover both your down payment and your closing costs. So there's no minimum buyer contribution. And here are the basic guidelines. Let's talk about eligible property types. These are the eligible property types. You have 2 to 4 unit properties, SFRs, condos, PUDs, and manufactured homes. The minimum credit score is a 620, but if your score is under a 680, FHA will give you a better interest rate and lower PMI payments. The standard debt to income ratio is this amount here. But if you have a 700 credit score or higher, then your ratios can actually go up to this amount here. Occupancy, 1 unit must be owner occupied. Income limits, there are no income limits. Loan amount limits, there are loan amount limits based on the number of units. I'll clarify further coming up. Seller assistance, the sellers can pay up to 3% of the sales price towards your closing costs. First-time buyer requirements. There are no first-time buyer requirements, but you must occupy one of the units for at least 1 year. Most lenders will require 2 to 6 months reserves. Let me provide further details in the guidelines. Regarding loan amount limits, there are maximum loan amounts in most areas. This is for a single-family residence. This is for a duplex. This is for a triplex. And this is for a fourplex. Now, in high-cost areas like Los Angeles or Orange County, the maximum loan amounts are higher. Here's for a single-family residence, and here's for a 2-unit property. Here's 3-unit property, and this is a 4-unit property. Most lenders will require 2 to 6 months reserves on multi-units. With strong compensating factors such as high credit scores, you can expect 2 months. Okay, so let's move on to credit events. Here are the credit event guidelines. Bankruptcy Chapter 7, you need 4 years after the discharge. BK Chapter 13, 2 years from the discharge or dismissal. Foreclosure, 7 years after the completion. Unpaid collection accounts can be allowed, but they might impact your PMI rates. Unpaid charge-offs are typically not required to be paid off, but should be resolved for best pricing. Let me add some further details on the foreclosure guidelines. Foreclosures. A 7-year waiting period is required after a foreclosure, but an exception can be made after a 4-year waiting period under certain conditions. This exception is granted when extenuating circumstances can be documented, meaning the foreclosure was caused by events beyond the borrower's control, such as a sudden, significant, and prolonged reduction in income or a catastrophic increase in financial obligations. I've actually closed loans under these circumstances, but you must be able to provide documentation to support the circumstances. Let me share a recent success story using this program. Meet Mark, a first-time home buyer with a 760 credit score. He bought a 4-unit property in LA with only 5% down. We negotiated to have the seller pay for the closing costs, leaving the down payment to be his only out-of-pocket. Let's take a look at the visual breakdown of his transaction details. This was his purchase price. These are his closing costs, and this was his total acquisition costs. Now, let's look at where the funds came from. Here's the conventional loan amount, and here is the seller paid closing costs, and this was his total out-of-pocket. If you don't have a realtor, I can connect you with realtors who are great at getting offers accepted with these type of low down payment programs. Ready to get started, or you just want to inquire? You can click the link below to set up a time at your convenience. Even if you're not ready to buy now, I encourage you to inquire today. Knowing what's available to you can help you better plan for the future. I hope you found this helpful. Go ahead and hit that like button and share it with someone who could benefit as well. Please don't forget to subscribe to get our latest videos. Until next time, I'll see you on the next one.